Hello fellow traders. In this video I want us to see how I was able to get a sharp entry on volatility 100 index using several strategies, and these strategies are smart money concept, TLBO, that is trend line breakout, and then the divergence also applied, and also the CRT. CRT means candle range theory. For those who doesn't know about it, you can see how the market is moving, and even when I switch to a higher time frame, that is 24-hour time frame, you can be able to see the market is moving very well with a very nice candle that is very bullish. Now let's dive into the analysis, and I'm going to use the MT5 where we will see how I was able to analyze my instrument. Now on this volatility 100 index, as you can see from the higher time frame, I'm going to start from the daily time frame. You can see the market was bullish for quite some time. It has been bullish since October last year, and you can see it's really doing very well. Now I'm going to start with the smart money concept. I know everyone is familiar with what we normally do in the smart money concept. This is whereby we normally we are able to know the direction of the market by identifying the break of structures and how the market is able to retrace back after break of structure. Now we have we can see there is a break of structure. This is clear. It shows that the market is in a continuation. You can see we also have another break of structure here. I'm going to be a bit faster. Break of structure over there. There is also another break of structure over there. We are just marking the major break of structure, and also we have the buy side liquidity. This is what we call the buy side liquidity, or in other words we can call it possible break of structure, because at a given point the market will go up and break that high. Now as we can see, based on our smart money concept strategy, we can see the market was giving us a series of higher highs and higher lows, higher highs and higher lows, and every time when the market breaks structure, we expect the market to retrace back, and the retracement is always of the entry is always of high quality when the market has retraced to the discount zone when the market is bullish. Now when we take our Fibonacci, we are able to know whether the market had already retraced to our discount zone, and you can see from what we have here, the market has already retraced to the discount zone. We have the equilibrium, and then we have the premium, and then the discount. So it came and tapped on this demand zone here, which is daily order block, and now we expected now the market to give us a confirmation from the lower time frame, and then we enter bullish. We enter the trade for buys. Now let's see how the market proceeded on with our analysis. The other thing I want you to note is that market was able to take this liquidity over there. It took that liquidity. Let me mark it. It was a very clear liquidity. It was taken out, and that improves the quality of getting into this trade. And you can see the market also tapped on the body of the order block, giving us a confirmation that the market is still bullish. Now let's go to, we have already done with the smart money concept. Let's go to the lower time frame. Let's see for our time frame what is doing. Nice. Now on the lower time frame, this is where TLBO strategy comes in, and let me show you how it comes in. You can see when you extend a trend line from those touches, you can see very well that the market was able to reject over there, and then it rejected again over there, and finally we could have gotten an entry from that point. That is how now the market behaved. We gotten our entry from that point. Now after seeing the TLBO on the 4-hour time frame, now let's go to the 15-minute time frame, because that's where I was able to spot the CRT with me. Now as we can see here, candle range theory is whereby we normally have accumulation, a candle representing the accumulation, distribution, and of course the distribution. Now I was able to spot CRT here after taking that liquidity. After this liquidity was swept, you can see there was a liquidity that was swept there. Let's see. Nice. That was a very good point of liquidity that was swept. So where did I spot my CRT? My CRT was on these 3 candlesticks. There is the black candlestick and the green candlesticks. These 3 candlesticks are the ones that give me the candle range theory, or the CRT. Now what are you supposed to do? You are supposed to mark the high of this black candle. This is the candle I'm talking about. The candle I'm talking about is here, the black one, and you can see this is the candlestick I'm talking about, the one that I'm pointing, and I have marked the high and the low of that candlestick. And as you can see, that candlestick is the one that we call we represents the accumulation. We normally say every candle is a range, and that's the reason where we normally get the CRT strategy. Now the next green candle was able to go below the lower side of the black candle, and at the same time it was able to sweep the liquidity below the the support area that I've indicated with a trend line. Now after sweeping that low, it was able to close inside, giving us manipulation. That was manipulation. After that, we also got the third candle, which gave us the distribution. Now what are we supposed to do now for us to get an entry? We are supposed to go to because we found our CRT on 15 minutes, let's now switch to 1 minute time frame. We are going to 1 minute time frame. That's where we are supposed to find our entry. So now there is always that model of entry, and this model normally comes in. The first model is when the market is able to, we normally call it unicorn model, whereby the market goes up and breaks the high and then retests back to fill a certain fair value gap. In that fair value gap, we can spot it here. Let me give out, this is the fair value gap I'm talking about. Either a fair value gap, there was this fair value gap that was filled, the market came back to fill that fair value gap, and at the same time the market was able to tap to the demand zone, and you can see very well, very nicely, the market was able to tap to 1 minute order block, and that's where we got our clean entry. You can see the market did not go below that level. It is shot up, going to the upside, up to where the market is, and now we expect the market to continue moving higher based on the higher time frame. We expect the market to go up, targeting this high here. This is where we are expecting the market to target. Now, where does now the final strategy comes in? This is the divergence. Divergence is also a very good strategy for confirmation, and we are going to use awesome oscillator. Let's apply the awesome oscillator. It's here. This is our awesome oscillator. Let's see how it gave us the divergence, because divergence is actually very powerful when it comes to showing us the continuation or reversals in a particular instrument or in a particular price market. Okay, now we can see the price was making this was a bullish hidden divergence, and as we all know, bullish hidden divergence, what happens to the price? The price normally creates higher lows, and we can see the price is creating higher lows, and the price is creating higher lows, and then when you check on your awesome oscillator indicator, the price is making what we call lower lows. That one gives us a good and actually a very strong confirmation that the market is in a continuation pattern. It is still moving up, and as you can see, if I measure the USDs, or the amount of money that is already there based on the the lot size that we have for the volatility 100, you can see right now we could be having more than 100 USD on one position. So you can imagine if you had a good capital and maybe open 10 positions, you could be making $1,000 from this kind of a trade. So as you can see, so it's possible for you to combine more than 2 strategies, 3, 4, and come up with a very strong and a powerful entry. Now you can see our entry, where our entry was. It's actually doing very well and still moving to the upside. So I think we can still continue applying the 2 strategies, and we shall be getting better results. Thank you, and continue with a good job.